Joining us now, we've got Matt Tuttle, CEO and CIO, Tuttle Capital Management. Matt, thank you so much for joining us this Friday. Happy Friday to you. Before we dive into your reaction to some of the earnings that we're digesting this morning, whether we're talking about Applied Materials or CAVA, the pun was not intended there. I'm curious to know your broad take on the market action that we've seen this week. It feels like the pendulum has swung to bullish sentiment. Does that make sense to you?
Well, it does. I mean, there's a couple of things going on. First off, Trump is telling you exactly when to sell and exactly when to buy. And, if you just follow that, you're doing extremely well. The last thing he told you was to buy. Path of least resistance right now is up. We wrote about that this morning in our newsletter. Until you start seeing potential economic weakness from the tariffs show up in the hard numbers, there's really no reason to sell off. Markets are above the 200-day moving average right now, which is structurally very important. So yeah, I mean, the path of least resistance is up. Short term, we are overbought. So expect some sort of pullback at some point. I thought yesterday would be it, but the bulls stepped up. But definitely things have shifted, and we are now in bull mode.
Okay, yeah, it definitely seems to be a shift. I know our Kevin Green earlier said it can go either way today, given that it's options expiration. But let's talk a little bit about the earnings that we have to go through today. Applied Materials, shares under pressure in the pre-market. They did beat expectations on the bottom line, reporting adjusted EPS of $2.39 a share. Revenue was essentially in line, $7.1 billion. But their forecast, they're forecasting for the current quarter revenue to hit the midpoint $7.2 billion. That was a little bit below consensus. What's your overall takeaway from AMAT's earnings?
Yeah, so to put it in context, the way we look at the world, we teach investors something called the HEAT formula. And the T stands for themes, meaning you want to be invested in the top themes. And AMAT is AI infrastructure. That's a theme you want to be invested in. But I also look at the charts. And AMAT has had a massive run up since Liberation Day low, and it bumped up against its 200-day moving average yesterday, and it's going to be below that today. Revenues were light, but I don't like where it is on the chart. I think long term, it's a name that you want to own, but short term here, I would be. Yeah, and we might actually go short it today just based on the chart pattern for short term. Longer term, though, this is a theme you definitely want to be in, and a name that's a leader in that theme.
Okay, I see what you're saying about longer term, because I am seeing a lot of sell-side analysts activity around this where they're ratcheting down their price targets, but they are maintaining bullish stances. So, for instance, JP Morgan Chase lowered their price target to 210, but they're still overweight. TD Cowen still has a buy, but they're lowering their price target to 220 on it. Wells Fargo lowering their price target to 200, maintaining overweight. So is your view that essentially that lines up with what you're thinking, that this is just a long-term, they're constructive long-term, but watch out short-term?
Yeah, I mean, the big brokers aren't going to tell you to sell short-term. They're going to lower their price target. So I'm going to tell you to sell short-term. But yeah, I mean, exactly it. I mean, they've run up so far so fast that they really, to keep going, they had to knock it out of the park. And they didn't. I mean, it wasn't a bad number. It wasn't a bad report, but it wasn't knocking it out of the park, and that's what they would have needed to do.
Okay, all right, let's talk a little bit about CAVA. Shares right now, little changed actually, but I know that we're under pressure initially off the back of their results. Now, revenue jumped more than 25% to $328.5 million. That was better than expected. Bottom line, better than expected at 22 cents a share, much better than expected. That's on an adjusted basis. What's your take on their latest results?
Yeah, so, guidance was a little bit weaker than expected, which is why they were trading down. I do love the chart here. If the 10-day moving average can hold, which it looks like it will, yeah, I think it's something that's buyable. I don't like the theme, consumer discretionary. what we were talking about, I do think some of this tariff stuff is going to start showing up in the numbers later on in the year. And, there is still the possibility we enter into a recession. So consumer discretionary isn't something that I'm buying personally. I mean, I love the concept. I love the food. I mean, if I ate carbs, I'd probably eat there every day. But, not something that we'd be buying here personally. But I do like the chart.
Listen, CAVA has pretty healthy options, although I know there are some carbs on the menu
can't eat
there.
that stuff without the rice, though.
That's fair. That's fair. You need a little bit of filler there for CAVA. I get what you're saying about if there is, because it looks like there's still some economic weakness, although there is some strength. So it remains to be seen how the tariff impact will play out. Any final thoughts on CAVA before we move on? Take a look at Take-Two.
Nope.
Okay. All right. So let's talk about Take-Two. They reported mixed results. Adjusted EPS $1.08 a share for Take-Two. Net bookings were $1.5 billion. Overall, what's your take on Take-Two?
Yeah. So I think the big issue with Take-Two is the gap between now and their next big release. It looks like people are thinking the next, Grand Theft Auto isn't going to be out for another 4 or 5 quarters, and kind of wondering, what they do in between. This one has run up quite a bit. Again, one of those where I think you had to knock it out of the park to keep going. It's not really a theme that we like either. So, this is something that I would be staying away from as well.
Okay, it's not. So, in other words, this Take-Two as a part of like gaming is not a theme that you like.
Not at the moment. I mean, I look at it as, consumer discretionary-ish as well. And again, until we get some more certainty on, are we going into a recession? Are we not? Stagflation, no stagflation? I just, I want to be very cautious on things that are tied to consumers having money to spend on stuff.
I mean, look, I hear your point, but it certainly has had a strong year. It's outperformed the S&P 500 year to date and on a year-over-year basis, even without GTA 6 coming out. And, looking across that sector, Roblox also outperforming as well. Any final thoughts on this recent earnings season, Matt?
I mean, so far, so good. I think a lot of people were predicting doom and gloom, and, guidance, being really, really, really down. And, so far, I think this earnings season has gone much better than a lot of people thought. And, and that's contributing to some of this bullish sentiment as well.
I think you make a great point. It has overall gone better than thought. I mean, I know we've gotten 3 different versions of guidance this earnings season, but overall, I think the expectation at the beginning of the season has played out differently as we wind down, right? At the expectation at the beginning was everybody was going to pull guidance. All right, we'll leave our conversation there for today. That's Matt Tuttle, CEO and CIO, Tuttle Capital Management. Always appreciate your perspective, Matt.